recently in this webinar, probably you can have some insight into currency trading and whether you can also participate in currency trading. Now, when you say currency trading, I think unlike stock market, because stock market you're all familiar. The two asset classes or three or four asset classes which are normally familiar is everybody is familiar with what is gold, right? So gold is very familiar. Then FDs, okay. Then we are also familiar with stocks. Whether we participate or not, at least we know that this is there. And some of you may be participating, some of you may not be doing it. But then you're also exposed to mutual funds. So somewhere as that the equity markets will touch you, right? So because some investment will be there, either it could be insurance linked, or it could be your investment in mutual funds, or directly you may be having a demat account, and you might have bought stocks, probably IPOs. So all these things are in the equity market. Then you have the FDs, which are already familiar, and then gold, which every Indian is familiar with. So these are very well known. So probably you may be participating in some way or other. Generally, gold, most of them do it for investment or for ornament in India. So this is a very different class, and how you view it is totally different. And FDs, of course, to get stable income, particularly those who are looking at stable income to manage their everyday life. And stocks a little bit where you want to take some risk to see whether you get some higher return. And then, of course, based on this, you also look at some sort of trading, right? So you also look at trading, and it could be in the form of nifty futures, options, or gold trading. All those things in the exchanges, you may be doing this. So this is there. Now, similarly, currency. When you say the first thing that for those who are frequent travelers abroad, or those who travel for leisure, or who send their son or daughter for higher studies. Now you buy, you go to the money changer and you buy the dollar which you require for funding aspect, or probably you go to the bank, take a loan in rupees, and then send them in the form of a dollar abroad. So that time you ask the bank at what rate you can send it. Similarly, those who have children abroad who are sending money from there, now you will also be looking for conversion of that amount at your bank counter, right? So there they will be exchanging and crediting your account in rupees. So this is the first step that you think about when you say currency. It is not trading, but you are dealing with a currency which is not which is other than rupee, because we are only doing rupee transactions here. But when you do a transaction which is other than rupee, then in that case it involves some sort of a rate. So when you say rate, you say USD INR. So you go to any money changer and ask him what is the rate. He may be telling you 79 or 80. So if you want to buy a dollar today, he may be telling you, no, you give me 80 rupees so that I'll give you a dollar. So that means you give 80 rupees and you purchase a dollar, which will be taking abroad for your travel purposes, or for sending money abroad for some education or other purposes. So now this what you do normally in exchange to get a particular currency, that itself probably can is now being traded in the exchange for the last 10-15 years right now, okay, because that is now formed a separate asset class. Normally the currency is a portfolio, is normally the corporates who are exposed to currency, because normally the corporates are dealing in goods and services in which there are imports and exports, right? So exports and imports, or loans. So this is most of the companies will be into doing one of this, particularly larger corporates, even small, medium corporates. Normally, generally, they have some exposure because they will be importing some products. They may be exporting also, or they may be taking some currency loans. So these are all forms part of any corporate book. So there is a familiarity regarding USD INR, because over a period of time they need to understand, at least if not make a forecast, at least they need to understand about the exchange rate. What is today's exchange rate, what is the exchange rate for after 1 month, 2 months. So they need to understand that so that they can deal with that. So for corporates, generally they are more familiar than at the individual level. Now what is now the full domain of corporates is now allowed for the individual retailers also to express your opinion in the form of buying or selling but it's all happening only as a settlement. You cannot buy a physical thing. That is, in the case of a stock market, what happens is you are buying physically. Now, if you're buying Reliance share, okay, so let us say today it is 2,400 rupees. So you are paying one share 2,400 rupees, and one share Reliance will be credited to your demat account. So that is the complete physical settlement of the shares that you are buying. Of course, there is a trading aspect also, but if you are an investor, you buy this. But whereas in the case of a dollar rupee, it is only cash settle. So when you're taking about cash settle, you are speaking like a futures. Now in the case of Nifty, what happens? You are not, if you're buying a Nifty futures, the Nifty futures is not credited to your account. The Nifty futures, when you buy, you sell, you buy, the difference only is credited to your account, not in the form of a Nifty futures share, right? So only the Nifty future, if you want to buy a Nifty, then you have to go to Nifty Bs or other exchange traded fund. That's different. But when dealing in a derivative, when you're dealing in derivative, particularly if it is Nifty, because some of the stocks now in derivatives are also in physical settlement. But I'm talking about indices. So these indices are not physically settled. They are only cash settled. That is, cash settled means the difference. Whatever you buy, you sell, that amount is paid to you, right? The difference, that is the profit or loss. So if it is a profit, it will be credited to your account. If it is a debit, it will be debited to your account. So you think the currency trading in a way which is very similar to the Nifty futures trading. So that is the easiest parallel that you can draw to know that how do you do a currency trading. The currency trading feature is one of the most important feature. Is today it is not physically settled, it is cash settled. One. Second thing, what is now in the corporate domain is also available for the individual to trade. Now, first there are important things when you do a trading or when you are doing investment. First is to know whether this is a regulated market, because there are a lot of unregulated markets. So you should not get into unregulated markets. Unregulated means crypto. It is not a regulated market. So you should not burn your finger in transactions or in buying or selling something which is not regulated, because tomorrow if something happens, if the settlement doesn't come, forget about the profit loss, but whatever amount that you have put, minus the plus the profit or minus the loss, that capital should come back to you. Now if that itself doesn't come, to whom do you go and approach? So here there's a very fantastically regulated market, because there are two regulators. One is the RBI and another is the SEBI. In the case of a stock exchange, only SEBI is the regulator. Here the monetary aspects of the Indian economy, whether it's interest rate, whether it is bank functioning or the exchange rate, these are all come under the exclusive domain of RBI. So RBI through SEBI and SEBI through exchanges have permitted the dollar rupee portion or other currencies also, which will come into it, to be allowed for freely to be done in the exchange, where probably whether the corporates want to participate in it or the individuals want to participate in it, it is free for you to express your opinion, like the way you express your opinion in the form of a long position or a short position in Nifty futures. So this is the most important characteristic. So what are the other characteristics and what are the investments that you need to do? So here it is a 9 to 5 market. So in exchange, in stock market, it is 9 to 3:30, right? So this is also a 5-day market. Okay, like this one. So this follows normally whenever the banks are open, normally it's there. If Mumbai banks are closed, then the currency derivative markets is closed. So this is a timing thing. Then what are the segments which are available in currency trading? Now you have the same thing like futures, you have the same like in exchange, in Nifty, you have the options, right? So you have the same futures and options. So you have the same futures and options in currency also. Okay. So if you have understood the futures working, if you have understood what is option and the pricing of options in Nifty, the characteristics of an option, and also the had the money, in the money, out of the money, why the premium should be like this, all those things, it is the same. Okay, as far as options in currency market also is concerned. Now, like Nifty also, there is and also another characteristic is Nifty also has a reference rate for settlement, right? Suppose if you don't close a position, and if the position has to be closed at the end of the expiry, then the exchange has fixed a benchmark, like what is the spot for the last 15 minutes, So spot of the last 30 minutes, the average of the spot is taken, and that average of the spot which is taken, and then your position is netted with that, and then the credit or debit happens. So similarly here, the reference rate is the RBI settlement rate. So in the case of dollar rupee or other currencies which are here, you have the RBI reference rate. Sorry. So RBI reference rate is the settlement rate, and normally this is published after 1:30. At around 1:30 time, this is released. Okay, so the RBI reference rate. So today, what is RBI reference rate? That becomes the rate. If today is a settlement date, that is the rate that will be taken for netting your position and for credit or debit into your account. So RBI reference rate is the reference rate here. Then what are the like now in the case of stock exchange or stocks, we speak about the different types of different stocks. Then we speak about the indices. We speak about Nifty or Bank Nifty. Then there are so many stocks which are there in the derivatives. So here, which are the currencies which are first listed in the derivatives? Now you have got the USD INR, which is what is we are very first familiar with, right? So then you have the Euro INR. So I'm talking about major thing which is reference to rupee, GBP INR, and Japanese yen INR. So these are the currencies which are predominantly volume wise. This is number one. Sometimes this could overlap. Sometimes this could be second or third or second or third. Then this is four in terms of the volume. Of course, they have got the crosses also, like euro dollar, where there's no great liquidity. Okay, so this is there. So these are the crosses which are available, but I think you can forget about this. Okay, so dollar INR, euro INR, GBP INR, Japanese yen INR. Now, one aspect, important feature that we need to remember is, see, along with the market, if you want to participate in any market, what are the essentials? One is that it should be a regulated market. That's very important. Second thing is, whichever stock or derivatives which are entering it in should have high liquidity, because loss or profit is one aspect. The other aspect is, if you want to get out of the position, you should be in a position to get out, right? So now, assuming you are making a profit and you're not able to get out. See, sometimes what happens in B and C type of stocks, the price will go up, gap up, gap up, gap up, gap up. So you will have only buyers sometimes. Then when it falls down, gap down, there will only sellers. So you will not be able to participate in the thing. When you want to buy, you will not get. If you want to sell, you will not be able to sell. So if it is there, then in that case, no, it is only in paper, whatever profit, loss, or whatever happens. So you will not be able to participate in the market. So you should have very good amount of liquidity. Liquidity should be measured in terms of two aspects. One is that we should have the volume wise, right? So volume wise, it should be sufficient amount so that we can participate. Then the second is the bid ask, because the bid ask has to be narrow. Suppose, what is the point if I say, the dollar rupee I'm quoting 79.10. So that means if you want to buy, you should buy at 79.10. If you want to sell, you can only 79. This is huge. This is a huge bid ask thing, like saying Nifty 15,900 and 15,910. So this is not a good bid ask, right? So it should be around only 1 rupee or so, and even less. So then only you can say that there's enough amount of participation in the market. The bid ask should be quite as narrow as possible. So in that case, in this particular case, the dollar rupee really scores even when compared to Nifty. So you have the bid ask spread, which is normally in quarter paise. Now, how this is quoted, dollar rupee, say 79, it is quoted to the fourth decimal place. So you must remember that it is quoted to the fourth decimal place. Now 79.1025, 79.1050. So it's a quarter paise. That means on the fourth decimal only you have the bid ask. Only in the fourth decimal you can see. So to that extent, it shows the amount of liquidity that is there in the market in this pair. Then you have the volume. Now every day, what is the value-wise volume? That is value-wise when you are talking about it. Approximately dollar rupee in futures in one exchange itself, it's more than 12,000 to 14,000 crores in one exchange, in one pair. This is approximately, you can say in measures in terms of Nifty futures. So to the extent that you trade Nifty futures, because in derivatives, which is the easiest way to trade Nifty futures or Nifty options, you get enough liquidity, right? So in the case of Nifty options, you get other money liquidity, and then the futures. Similarly, in the case of dollar rupee, you have great liquidity, like how the Nifty futures is the easiest parallel that you can draw. in order to make you understand, is that the way that you can buy or sell or close a position in Nifty futures, similarly you can use the dollar rupee and you get the quarter paise margin. Quarter paise bid ask. Now we'll move to contract specification. Now in the case of a Nifty, you say it's a 50 lot, right? 50 quantity. Bank Nifty is 25. So you know that 50 into today's value is 16,000, approximately 16,000. It comes to 8 lakhs is the value of one contract there. In the case of dollar rupee, and for 8 lakhs you need 1,25,000 or so is the minimum amount that you need for doing one futures contract. In the case of dollar rupee, you got dollar rupee, the margin that is the volume that is there is $1,000. Similarly, in the case of Euro INR, it is 1,000 Euro INR. For GBP, it is 1,000. So these are all 1,000. Only the minimum, the quality size is only 1,000. The 1,000 means that what is the value of one contract? Suppose if it is 79. If it is 79 rupees, then you got only 79,000. 79,000 is the value of one contract. 79,000 is the value of one contract. Now what is, so that means one contract, 79,000, whereas in Nifty futures, it is 8 lakhs. So just see the difference, because the reason why what will make a difference is not in terms of profit loss. The question is that you want to test your ability, trading skill and ability, your psychological ability to do all those things. Then you want to test it in with a smaller lot, smaller thing. Then dollar rupee fits in, because in the case of Nifty futures or Bank Nifty futures, the value is huge. But whereas in the case of dollar rupee, even if you trade one contract, it's only 79,000. Now for this, doing this value of one contract, what is the requirement that you need? What is the amount of investment that you require? Okay, normally it is around 2 to 2.5% is the margin amount. So that means if it is 80,000 or so, so you may require some 1,600 to maximum 2,000 rupees. This is the margin that is required. That's all. This is the margin that you require as far as the Nifty future, as far as the dollar rupee is concerned. So for trading one contract of futures of $1,000, the investment that you require is only 1,600 to 2,000 rupees, right? And so that means for a very small amount you can test your ability. Now I told you that is the value of one contract is $1,000 and the bid ask is quarter paise, right? So that means quarter paise, so one pip movement, that is what you call, so one pip movement either side, whether for your benefit or for a disadvantage, one pip movement, quarter paise into $1,000 comes to 2.5 rupees. So one pip movement will be translated into 2.5 rupees. 2.5 rupees. So 1 rupee movement in this case, $1,000 means it is 1,000 rupees, right? So if the currency, if the dollar rupee moves 1 rupee, from now it is 79, let us say, next month it moves to 80. No, by the time the contract settlement, then for one contract you will get 1,000 rupees. Similarly, if it falls down, then you get also 1,000 rupees. So you do, let us say the dollar rupee movement, you are able to get 1 rupee movement favorably to you. Okay, whether you are selling or buying, then 1 rupee movement you get 1,000 rupees. Okay, so at the end of the month, so let us say you require 10,000 rupees. So you do 10 contracts, right? So you do 10 contracts. So when you do 10 contracts, the amount of investment that you will be requiring is only 20,000. You will require only 20,000, and that 10 contracts value for 1 rupee movement, you can easily get 10,000 rupees. If there is 1 rupee movement, because for every 1 rupee movement you get 1,000 rupees, right? So 1,000 into 10, you get 10,000 rupees. You get 10,000 rupees. So very simple calculation, and amount of investment that is required is very, very less. We are talking about only futures. Suppose you don't want to drive down this value, like investment, then you can consider options also. You can consider options for trading. So at the money option, now normally let us say for one, and also the contract that is listed, normally the USD INR or Euro INR, all these contracts, the closure of this contract is in the case of Nifty it is the last Thursday, right? So in the case of currency market, the closure is 2 business working days before the end of the month. So let us say July 30th is approximate. Let us say July 30th is Sunday. Okay, so July 29th is Saturday. Let us say. Then the 2 working days. Okay, is it is Wednesday, and it is Friday, and then Thursday. So what will happen is 2 prior working days should be there. Okay, so that means the contract will close on Wednesday afternoon at 1:30 or 12, I think 12 noon, because the after 2 days it becomes a spot. So for on Wednesday, Friday becomes a spot in the market. So it will close on Wednesday if Friday is the last working day of the month. Let's say if Friday is the last working day of the month, the contract will close on Wednesday. Okay. So if it is a Tuesday, let us say the last settlement, last working day of the month is Tuesday, then it will close 2 working days before. That means on Friday it will close. So this is how the expiry date for the month-end contract is there. Now, like in the case of futures, Nifty futures, sorry, in the case of Nifty options, you have got a weekly option expiry, right? So you have got a weekly option. So similarly, in the case of Nifty also, there is a weekly futures itself. There is a weekly futures, there is weekly options. Both are there. So all those weekly futures and weekly options, they close on Friday. Every Friday, like in the equity market, it closes on Thursday, right? It closes on Thursday. Every Thursday, if it's a working day, then in the case of equity markets, the weekly settlement is on a Thursday. Weekly expiry is on Thursday. Similarly, in the case of dollar rupee, it is on Friday. It is on Friday. So, but normally month-end contracts are very highly liquid as far as futures is concerned. In the case of options also, the same expiry date, like what I told you, 2 working days before the last working day of the month. So you'll have the options also for month-end contract expiring on that day. Similarly, you have the options which will expire on every Friday. So you got options as well as futures. Now, if you go, I told you the options that is required for the month-end contract, approximately, let us say you for $1, for $1, it may be 50 paise or 0.5 rupees. 50 paise or it is equal to 0.5 rupees. So that means for $1,000, there is just one contract, the investment that is required is only 500 rupees. The investment that you require is only 500 rupees when compared to what you have to invest 2,000 rupees or so in the futures, in the case of a futures. So that way the amount of investment that is required as far as the option is also quite less. Even in the case of futures itself is not much, so you can as well go for a futures itself. But you want to ensure that the amount of return, that is the return that you are getting in this is much lower. Then in that case it is better even you can look at the dollar rupee exchange like this, where probably you will have options also, and you can do the trade with the options itself with a lower investment. Another important characteristic feature thing that we need is, so unless like equity markets, dollar rupee is a very important thing for the economy. That is the first and most important macroeconomic variable. Okay, more than the stock market is the dollar rupee. Okay, so that always will be looked at by the RBI and the finance ministry very closely. Now rupee, and also they are much easier to read about the direction of the dollar rupee is much easier to understand. It's much easier to understand when compared to the normal that is what you say the stocks, or even in the Nifty index. So see, the Nifty index, whether it's Nifty index or the stocks, they are volatile. So what are the advantages and disadvantages of trading? I'm telling you, as far as between equity assets and dollar rupee. First of all, dollar rupee is the most important macroeconomic variable. It's the most important macroeconomic variable, right? It cannot be prone to the type of swings on an everyday basis like what happens as far as Nifty is concerned, right? So Nifty will have huge swings which will not be controlled by the regulators. But whereas in the case of a dollar rupee, to a very large extent, either the gain or the loss on a daily basis will be controlled. To a very large extent, will be controlled. Depending on where the dollar rupee is, will be controlled by RBI, okay, through buying or selling. Not that they do every day, but what I'm trying to say is they have a tab on the movement, so that the very big volatility which happens in stocks and equity markets don't happen. So that means it gives you a much more peaceful aspect of trading compared to the compared to Nifty. Now, what happens today? Nifty, it opens with a gap up. Okay, today it opened at 15,950, goes up to 16,030, falls down to below 15,800. So the amount of swings that you get and the gap ups and gap downs that you get as far as Nifty is concerned makes it a very difficult proposition to trade. When talking about trading, investment is a different ball game altogether. But when it comes to trading, now you have to look at whether the pair is just going to be like hell of a situation, whether it is going to give you that much of swings where you find it difficult to put stop loss. You put stop losses, it just gets smoothed out, and whether there is an easy trading parameter which you can do. All those things are much easier as far as the dollar rupee is concerned when compared to Nifty. Okay, so that makes it much easier to get attracted to the currency market trading, particularly case of dollar rupee, even when compared to other currencies, because other currencies are subject to their own swings and things which can be but even there, those currencies also, they don't have a gap up gap down, because most of the other international currencies are a 24/7 market. They work seamlessly, like how the gold is, right? So those who are familiar with gold movement and who are trading in the gold, about the gold doesn't have a gap up or gap down, except because we close at in the night and there is a small gap window available. But normally by the time New York is closed, so we don't get much of a gap up gap down the next day as far as the market year is concerned. So gold, the way you look at the gold from the perspective of not much of a gap up gap downs, similar thing exists as far as the dollar rupee is concerned. And I feel the dollar rupee is a much more tradable thing than even gold, because they are less, they don't have that much of a sideways movement like gold. So you get a good and also the amount of investment that is there for the dollar rupee is much lower than what probably you can have for gold. So here we have the macroeconomic, as I told you, because of the most important parameter and most important macroeconomic asset, or one which has to be clearly monitored and called, because it has its own implications. If the dollar continues to gain against the rupee, your imports becomes expensive. Okay, exports become more competitive. So it may be advantages for exporters, disadvantages for importers. Disadvantages in the sense of you and I buy petrol, and that petrol becomes quite expensive because of this. The gold becomes expensive. Electronic goods become expensive. So consumer items become expensive. So the rally in the dollar rupee from one level to another level, it affects the economy to some extent, and so it needs a little bit of a control in order to ensure things don't go out of hand. So to that extent, it gives you some sort of a comfort feeling. Okay, that to a very large extent, I will not go out of place. That is, tomorrow I see day before yesterday when the government announced export duties on petrol exports, windfall tax on ONGC, suddenly 8% gone. So that is a stock. Even in the case of Nifty, suddenly the last couple of it has become a feature that it opens either with a gap down and then rallies, or it gaps up and then falls. So there is no particular trend which becomes that easily tradable for you to make the money. It will look as if it has gone from 15,200 to 16,000, but within that, how much of turbulence it gave, which put you probably thinking that no, day before yesterday you thought probably it's going to come down, so this is the top. You trade on the shorter side, then it goes on the longer side of the market. So the entire thing becomes a very murky thing, right? No, so you find it very difficult to put in a tab and say, this is where probably it will end. But whereas in the case of a dollar rupee, it's much more easier. So you have a dollar rupee which is a much greater important thing where the gap ups or gap downs are much less, or it's not that it will not happen, but they are they are not too significant. They are not too significant to really make a huge difference. Okay, so that way this is a much more tradable asset, easier tradable asset compared to dollar rupee, the Nifty. Then whenever you make profits, you have to look at the return on the investment that you get, right? So suppose in Nifty futures, I am putting 1,25,000, okay, per month, and I am trading one contract. Okay, is it easy to make 1,25,000 in trading in one contract in Nifty consistently in 1 month with a trading call? Very, very difficult, because you need something like 2,000 points for a 1 lakh. 2,000 points 1 lakh. For 1 lakh, you need 2,000 points. Even if you are perfectly correct in putting your top and bottom, per day, per month movement 1,200, 1,300 rupees, 1,000 rupees. So the maximum that you get is 50,000 rupees. So what is the return? Even if a very good trader, for 1,25,000, 50,000, so 50% per month, assuming you're a great trader. It's not possible, but I'm telling you, just a reference point. In the case of dollar rupee, let us say you're putting 2,000 rupees. Okay, if you have been able to get that 1 rupee movement, okay, then you're getting 1,000 rupees, which is 50%. Even if you're getting 500 rupees, 50 paise profit, you can say that you got 25% return. 25% return on your investment. Even at 1,25,000, do you think they will be able to get 30,000-40,000 rupees in a Nifty contract, which is equal to 600 rupees? Not easy with all trading calls that you can do. Think about it. So even if you get 50 paise or 25 paise profit out of this entire movement of the dollar rupee, you are sure that probably you will get much greater return on investment for the amount that you are putting in dollar rupee futures than what you put in Nifty. So a very compelling reason is the great return on investment that you can get. It's a return on investment that you can get in currency trading. So you have to compare not with respect to the amount of movement that you get, okay, but in terms of because the margins are low, volatility has to be lower, and volatility cannot be like what the Nifty is. Nifty, the month high to low could be 6%, 7%. Dollar rupee cannot afford, so it will be around 2% or so. So the margin amounts that you put, okay, if it is even 2%, there it is 7%. So we should have a margin which is only 1/3 of the Nifty future, so we can get 40,000 rupees. But there it is only 2,000 rupees. So that means the return on investment that you're going to get as far as Nifty is concerned, as far as dollar rupee is concerned, or Euro INR is concerned, or GBP INR is concerned, is going to be much greater. Some disadvantages are there. In the case of intraday trading, you don't get much of a return in dollar rupee. Intraday trading, maybe the amount will be smaller, but still it will be profitable. Euro INR is much greater. The volatility is greater than dollar rupee. GBP INR is much more volatile. So those who are looking for intraday profits, like the way you look at crude in commodities or some stocks in equity markets, so those who are looking at some fast intraday profits probably can consider GBP INR more than any one of this. You can consider GBP INR more than dollar rupee or Euro INR for a smaller increase in the investment that could be there. Okay, so the way that you trade, the systems that you adopt for trading, whatever system that you adopt, probably has to be fine-tuned and back-tested for currencies which probably, because the time frame that you choose in the case of index for trading purposes, if you are using a moving average or using some system, probably that time frame or that type of system may have to be back-tested as far as the currency market is concerned, to see which one is more suitable and which more time frame is suitable for that particular system, right? Suppose if you are trading Nifty futures with a 15 minutes or 1 hour, that may not be the same as far as dollar rupee is concerned. The time frame could be different. So the moving averages, all those things that you may be using may have to be slightly maybe different. Okay, so but still what we are saying is that you have the dollar rupee you have the dollar INR, you have the euro INR, you have the GBP INR. So you have a feast of currency. Forget about the crosses. In these three things itself, probably the euro INR, GBP INR, you can even look at the intraday, because euro dollar, GBP dollar are great international or big international currencies which are traded doing the after we close. After we close, also those currencies are traded. So because of that, next day there can be some movement which could be against us. So better not to look at euro INR, GBP INR on a positional trading. That can be looked more for a intraday trading. But dollar INR, not a very large extent. The movement will be quite comfortable on a daily basis, and you will have a decent intraday movement. May not much with respect to close basis, but decent intraday movement and 1 or 2 days of important upward movement to give you the profit. So just to take you through an example of that, now we will look at all these things in detail in coming webinars on how to trade. We will look at it. Now just to look at the chart. See, this is dollar rupee. Now there has been some period of consolidation here. Okay, there has been some period of consolidation here, and after that you can see there has been a very decent upward shift movement here. So you can you can use any of the system to trade. Now the last dip that carried was here. Okay, so there was some small minor fall from here to this place. So from here you can look at what is the Fibonacci retracement that you need to do keep in order to trade the dollar rupees. For example, this has gone from 78.84 and already it has gone to 79.40. So it is around 56 rupees. So 56 into probably you can keep 38.6% retracement, 21 paise. So you can keep 78.10 or 11. So from here you can keep 78.10 or 11 as the first point, as a stop loss, and be on the upside, and look to be on the upside of the market. So it could be 78.10 from the bottom, could be probably the stop loss. Okay, for this movement, and you can be a buyer keeping 78.10 as a stop loss. So that means you can buy on dip, which could be probably looking towards 78.88, 89. So maybe 79.20, 25 you can buy and keep 79.10 or less as a stop loss and see how much it moves. So similarly, you can have for every day, you can have your same pivot point formula calculation. Now I'll just go with the 15 minutes chart just to make you understand. But how we are going to trade all those things, we will think about it later on. So today, this is today's thing. So it opened here, and so when it went up above 79.02, we could have kept 78.94 as a stop loss. We could have kept 78.94 as a stop loss above 79.02. Then it went up above 79.13. We could have kept 79.02 as a stop loss. Then it went up. So now it went up to 79.34. So tomorrow you can look at this. Now it is at this level. So probably whatever the pivot points calculation that comes tomorrow, we can use that for trading. So some very clear case of intraday trading. And here also, if you look at it, this day it opened here, went up here, then it came down. So when it started to fall below this, we could have kept that as a place where we could have gone short, keeping this I as a stop loss. So some very simple formulas that you can probably use in order to trade. Probably you can use the same pivot point formula calculation or any sort of a Fibonacci calculation also. So same system. What I'm trying to say is some of the same systems which are used to that can be used as far as dollar rupee also is concerned. So it is not something which is new for you. So we will look into all these aspects of how to trade now dollar rupee. We will have one session on trading in currencies. Now we have highlighted some of the features, and we will look at the trading calls as far as these currencies also is concerned. Okay. So now we'll just have one look at the Nifty, the trend for Nifty and Bank Nifty today, and so now See, this was the last important low. So if you look at the daily chart, right? So this is the last important low, and if you keep 61.8% retracement from this level to this level, so we'll keep this. So now tomorrow, what can happen, or what should we do? See. So the 61.8% comes at 15,702, 703. 78.86% comes out to 15,614. So maybe closer to that 15,670, 680 where it came, a couple of days back, which was cut and it moved up. I think that now has become the place where probably you can look towards some sort of a buying. There is 15,690 or 15,710. So you can buy closer to 15,710. Keep 15,610 as a stop loss. Keep 15,610 as a stop loss, because that is 78.6% retracement. So you should not take a call much above that. So you can keep that as a stop loss, and the buying positions can come very closer to the 15,710. That's what I told you, 15,710. And if you are buying there, then in this particular case, the movement is something like, you can take a profit which is 125 rupees or so. We can take a profit which is closer to 125 rupees or so. You can take, because if you are buying based on this Fibonacci, that is from this place to that place, any rally from the fall has to clear 125 rupees. Has to clear 125 rupees. So if you are buying closer to the 15,710 mark, I would suggest that you make an exit closer to 15,825, 827 levels. Make an exit closer to the 15,825, 827, and then let us see what happens. So the first call that comes is closer to the 15,710, and now told the bigger Fibonacci when you draw from here. So the 15,829 has been breached, which is around the 200 points. So the here also the 38.2% comes exactly at 15,704, and then comes to 15,604. That's why I told you that 15,610 now becomes a very important place of that is the resistance come support areas. So the first thing that we need to do is look at 15,710 approximately 700, 710. There probably it can revive from there by either it can go by 130 to 200 rupees. So there's a chance that 15,710 can go up to 15,910 or 920 and then fall. So I would leave it to you to decide the profit element. At 15,710, if you buy, then keep 125 rupees as a conservative profit target from there, 15,835 or so. Otherwise, you keep 200 points, 15,910, 920, at which stage you should definitely make an exit and make a reassessment later on. So right now, the fall, if it is going to take place below 15,610, it's going to be probably not good for the market. And let's do the so this is the connection that we have drawn. So here support comes, but 15,590 or so tomorrow or so, 15,575, but I don't think we need to work too much on that. So 15,610, I think probably we should keep the stop loss for any long position. And if you draw the trend line based on this, then we have 15,600. So closer to the 15,600, 610 could be a place where from where the probably the change in the market direction can take place. And also if you see this place also 15,927 to 15,510, 410 points. So 410 points is 16,025 minus 410 points is 15,610, right? So 15,610, please keep in mind, as a very important area where the turnaround can take place. So keeping 15,610, you please look for any buy position below 15,000, that is stop loss at 15,610. The first area of entry can be 15,710. Okay. The target area should be 15,835 to 15,925. Now, since it has come down below this, this is the 15,890 levels, 15,890 levels, and this is 15,000. So these are all going to be very important resistance areas. 15,925, 15,890. So approximately that place can become a very big hindrance as far as the market is concerned, and already it can drop down. So this is the area which is there, so we need to be careful about this 15,610, 620 levels. So all in all, the correction seems to be, and also if you look at, we have already talked about a 5.5% retracement. So 15,183 into 5.5% exactly 16,123. See, 15,183 into 1.0556 is 16,027. Exactly, it has stopped at this place. This is what we are talking about, the very important place. Here also, if you look at it, see, this correction also is 15,740 to 15,693, 100,000 points. I have been talking to you that always this 1,000 points always becomes a very important place. We're expecting maximum 16,200. But right now the 16,083 is 5.5%, because here also if you look at it, this close was 15,800 approximately. So 15,800 into 1.0556 is 16,678. So the close, if you see, is 16,661. 16,000, it briefly exceeded to 16,793 by 100 points, which probably could be around 6% or so. But generally speaking, this is the area where probably we should be very careful about it. A 5.5% retracement, and right now we have got it, and also the Fibonacci retracements are very much there. For example, this has just come. See, this is the 38 point. This is the 38 point. That is 15,984. Is a 38.2%. 15,800 is a 50% retracement. 15,984 is a 50% retracement. It's a 50% retracement. So that has been achieved. The 50% retracement has been achieved. So right now we need a close which is slightly below 15,610 for us to get out of the position. So now I think either 200 points on the upside swing is possible, and downturn it can be up to 15,610. Better buy close to 15,710. Keep stop loss below 15,610. If the market is to sink suddenly tomorrow, say from around 15,810, suddenly it goes down to 15,610, 615. That is, let us say the fall takes place very fast. Then in that case, around 15,610 you buy. You buy. Keep some 20-30 points on the stop loss. Okay, good chance that it can revive at least by 200 points from there. Okay, so this is the trading call that we can see as far as Nifty is concerned. And Bank Nifty, again, probably this area could be the important, because this is the area which was broken and it went higher, right? So this is the place where probably we need to be careful, and once it starts breaking this particular high, which is the 33,593 or 33,593, or we can 33,600, 650. So if it starts to break 33,650, you can go short. Keep this high as a stop loss. Keep this high as a stop loss, and this also effectively has come up to 50%, I think. Yeah. So this is also approximately 50% thing it has come. So I think this also looks to be over the fall. And also if you look at the overall big picture, so here see the 23 that has not been breached. So this has not been breached. So we are now we are not got a close which is about 34,450 levels. So it means that now we are looking more towards a fall. So we need to keep this particular high of 34,450 as a stop loss and look towards structuring our strategies. So on Thursday we will look at these strategies based on the views at that point of time, right? So thanks very much. So you can ask your questions now. Thank you very much. Thanks for your participation. See you on Thursday again with a review of the last week's strategy and new strategies for coming week. Thank you very much.